as we have been talking about, oil prices also playing into all of this, and they're rising today. Our next guest sees oil prices actually going back to over $80 a barrel. Jason Schenker, he's president and chief economist at Prestige Economics. It's an energy consulting firm. He is down in Austin, Texas. Jason, thanks so much for joining us. You know, we had especially strength going into the end of the oil session today. I mean, does this have anything to do with what's going on with BP, or is it much more about the gasoline supplies issue?
Well, I think there are three things. One is not only was there a gasoline draw today, which we would expect at this time of year, but there was also a crude inventory draw, which hadn't really been expected. I think those things are really important. The BP issue, which is going to affect the back end of the curve in terms of supply, is important. And then the third thing that's affecting it is tomorrow there's going to be the non-farm payroll number, and that's expected to be really big. And I think people are also trying to shore up their positions today before that release tomorrow.
Jason, could I ask that non-farm payroll before we delve back into oil here? Non-farm payroll, 500,000, 600,000? Is that the range you're hearing?
Yeah, our estimate is 450,000. I think the Bloomberg consensus is somewhere near the 500,000 area.
Okay.
So let's talk about these numbers and just general demand and how that plays into your oil scenario, because I imagine you're looking at the same kind of issues that all investors are looking at, whether it's stocks or currencies now, and that is the U.S. economic strength on the one hand and risks coming out of Europe on the other hand, and China perhaps as well. So how's that all weighing out in your scenario?
Well, there are a few things that most people wouldn't really debate. One thing is that the U.S. economy is recovering now. At the rate we're recovering, it looks like we'll be exceeding pre-recession levels by the beginning of next year. The global economy, all major economies are expected to grow this year and next year. That global growth is really going to feed into demand for oil, for commodities. Even if China is going to try to slow their growth, the question is how effective will that be? And Europe, the concerns about this credit crisis contagion, it may affect how people view sovereign debt, but still, the downgrades have been relatively slow in coming. And the truth is that it may not cause a double-dip recession. I think right now we look at these non-farm payroll numbers, we look at growth, and we go, well, there are things to worry about, but it's not a party ender.
Jason, you talk about the global growth going forward. What, in your estimation, is facilitating that?
Well, I mean, I think there are a few things. The biggest thing right now is accommodative monetary policy. Right now, most central banks around the world have monetary policy at a level it's cheap money. You also have fiscal stimulus in a number of different major economies, which are also kind of pump priming economies. These sorts of things are driving demand. They're driving growth. They're incentivizing businesses. They're putting money into the economies. That's where you're getting a lot of the growth. And even in Europe, you know, even if some economies do show slower growth, it's highly unlikely that you would get a contraction.
Jason, I got to ask you about the BP factor here. There has been some talk about questions about how this is going to affect supply. What do you think?
Well, there are a couple things. One, in the medium term, in the long run, could this affect supply? Yes. Is it going to affect supply in a major way? Probably not that major. Last calculations I saw were some of the changes in permitting could affect 10 plus years out supply by a million barrels.
On that front, just really quickly here, we got news that the moratorium now is not just on deep water drilling, it's on shallow drilling. Very quickly, what effect does that have?
Well, I mean, if there's a reduction in the number of jackup rigs that can be drilled deep water as well, it's going to have some impact, but it's probably going to be, again, medium term, long term.
All right, Jason Schenker, president of Prestige Economics. Thanks again for joining us to talk about the oil situation.